Good evening, everyone, and welcome to Pull Up with Limbs and Things. My name is Dr. Chanel James. I'm the owner of Limbs and Things, mobile and telehealth physical therapy practice. I serve aging adults in DC, in Maryland, and in Virginia. And tonight we're talking to Mr. Moses Wright. He is a partner with PLR Investment Services. And we are talking finances tonight because a lot of times I see patients who tend to need extra services at their home, or they are in need of trying to decide if they should stay in their current place or move to another location in order to thrive. However, everything takes money. And so a lot of times we are trying to figure out the best method of sharing information. And so connecting with Mr. Wright is a way to ensure that you have all of the funds lined up so that you can make the decisions that you need to make. So, welcome, Mr. Wright. How are you?
Well, I'm well. How are you doing, Dr. James?
I'm good. I'm glad to have you. Please tell us a little bit about your business and any gems you might have.
Oh, okay. My name is Moses Wright, the third, where we work with Plans for Life, where we focus on long-term care, life insurance, and disability or business insurance, rather, shall I say, where our goal is to help people protect their assets. We do this by working alongside our clients, not sitting across the table from them, but sitting next to them to find out their goals. And then we try to bring solutions to help them achieve their goals. We like to say we do the heavy lifting and bring them to the table when it's necessary. So that's a lot of what we do. Our goal is to, and with that being said, we try to really work with them just from any position that they're in, their current condition that they're in or position, and we try to use that to leverage what they're trying to accomplish. And whether that is wealth preservation, and that's how we kind of look at the long-term care space, wealth preservation. We try to really work really hard to make sure that that is preserved, in terms of legacy purposes and for the goals that people may have in mind. And so, and that's essentially extremely important because sometimes we're dealing with, first generation that may be able to share assets with their generation that's coming behind them. So we want to make sure that that stays within the family as long as possible.
Absolutely. So tell us what's different about you though, because you don't just broker with a specific company, right?
And that is correct. So we're not captive. I know in this particular day and time, a lot of people like to say that they're not captive, but we don't have actually uh, a priority list when it comes to finding solutions for our clients. And what I mean by priority list, we're not necessarily tied to a company where we have to prioritize their products over another. We can actually, that gives us flexibility, fluidity to actually find a solution that really meets the client's needs. So we work with over 40 all big, strong, safe companies, all A plus rated companies to help find solutions that meet clients' needs and really helps us really delve into it, the nuances that these companies bring to the table because no two companies are alike. There's some new, they may have some basic similarities, but there are some little nuances or niches, shall I say, that where they distinguish themselves in the marketplace. And what we try to do is to delve deep into that to make sure that we can find a solution to meet everybody's needs because no two people are alike. Everybody has a particular situation. And so what we like to do is we like to consider ourselves like that boutique. We take a boutique style approach. And so we like to find solutions that are tailor made for the individual, not necessarily a one size fits all. And so that's what we do. So we do that again by trying to delve in by asking the right questions.
Mhm.
What's important to you? That's and really take an active listening position and making sure that we can really speak to that need. And then also what we do in terms of finding solutions, rather, shall I say, what we'll do is we'll look at what's important to them and we'll try to anticipate the next steps forward and find a solution towards that as well.
Okay. So say someone, their next step is to determine, or they have already determined that they need some extra assistance at home, but they're finding that they need the capital in order to bring this person in because we know that Medicare or your private health insurance may not cover someone coming in your home for a private duty type situation. But we want to know from you what type of insurance would be best to cover those services.
Well, you have in particularly long-term care, of course. when you look at that, and sometimes you have particular situations where a lot of times people are not in position to get long term care because you have to qualify for long term care. But what we do is, of course, the ideal situation is to get out in front of it. And but a lot of times when things come in our sphere, as well as shall I say, they're a little bit more complicated than that. So what we have to do is we have to find a way to meet people's needs based on where they're currently positioned in terms of themselves financially. So what we try to do is utilize the assets, see what they have, to see how we can determine that they can get the proper care that they need for their lives. So what we do is of course, we do an assessment. We look at what they have, and sometimes it's a situation where they have it. We just need to make sure that we direct it into the right position so that they can take care of the current need. So if it's a long-term care, there's so many different solutions. You have your traditional long-term care plans, uh, which is not necessarily utilized as much anymore. But then you also have what you see in the marketplace, long-term care and insurance with a long-term care rider, which is highly popular, which is we consider like a hybrid approach. And then you also have long-term care riders when it comes to annuities. And so those are some solutions we look at there, and so what we try to do is make sure that they can find solutions that'll meet their need. And what we try to do as well as partner with not only them, but the care provider that they're currently working with or that they have in mind to make sure that we can uh, make it as seamless as possible, not only getting the coverage, but making sure that it works for all parties involved.
Okay. Now I want to know about the three of those that you mentioned, like the differences. But if there's anyone watching and you have a question or a comment for Mr. Wright or for myself, you can put it in the comment section and we'll ask it and talk about it. As always, pull up with Limbs and Things is to confirm something you know, to challenge something you don't know, and to be able to share that information with someone else. So if you would break down those three scenarios you talked about with long-term care insurance.
No, I mean that's awesome. I mean, when you look at it, long-term care insurance is basically insurance that you look at it from a traditional perspective. That the downside to that was that it could only be used for long-term care purposes. If somebody did not use to have a long-term care need, a lot of times they the funding of that policy was essentially lost. And so when you looked at that, there was a really people always looked at the probability of that happening, and what they in their financial position being at risk was a little grave or too great of a risk to take. And those who did take it, one of the things that the insurance industry didn't take into account was the cost of long-term care, because as we all know, healthcare has gone up exponentially, and it continues to go up the longer people live. And
Mm-hmm.
so what was not factored into it financially was policies that kept up with the cost or the expenses of long-term care. And so with that traditional side, they put in a cost of living rider. I mean, to keep up with the cost of living, but healthcare exceeded greatly that cost of living. So that was a challenge in that area as well. So a lot of carriers exited the industry
Mm-hmm.
because they thought it was just too much, and they stepped away from it. So essentially, what did they do? They came up with what is a long-term care rider on a life insurance policy. So those who did qualify were able to. There was a different level of underwriting just for long-term care in and of itself. But then they came up with a long-term care rider that was attached to an insurance policy.
Mm-hmm.
So it was a long-term care provision where, of course, the only thing that a person had to do was meet two of the six act, activity daily living
Okay.
criteria, and then they were able to turn on a long-term care rider within the policy. So, for example, if you had a policy that was, I'm just throwing out a number, 150,000, well, that 150,000 could be used for long-term care purposes, based on being diagnosed by a physician that you couldn't perform two out of the six activity daily livings for 90 days. And then they would allow that policy to be turned on so that the person could use it for long-term care purposes.
Hmm.
And so that's really where it's really been popular, because the cost of that is really um, uh, bodes well with the industry in terms of the carriers, because the carriers looking at it, you just taking it from the death benefit. So you're just
Right.
taking that money a little bit early, and it's just a reduction in and of itself. And so, that's been well. The challenge with that again is, you know, people having enough because of the growing cost in healthcare, and with more and more people opting to choose healthcare in home, then not to say that is it a different cost per se.
Hmm.
I think in terms of that, the carriers have become much more flexible in a lot of things that they are implementing to make sure that people can receive care no matter where they are.
Right. So can you just ask your insurance company to add that benefit to your current life insurance policy?
It would require underwriting, so
Okay.
they would put you through another underwriting
Yeah.
to do that as well. And I noticed that, particularly because we're in the backyard of the federal government. The federal government is actually uh, doing that with its employees in terms of offering that long-term care benefit,
Hmm.
of itself. But in my opinion, is worth going through that underwriting to add it, because you never know again, the one never knows what the future may hold.
Absolutely.
And basically, the statistics show that there, over like 40, like it's 40% of the people will need some form of long-term care in the future.
Right.
So when you start looking, or you take those into the equation, or you look at that as a whole, it's just a smart thing to do to kind of look into some form of long-term care. And the reason why I always stress it, particularly, and just for this fact, I think the studies show men that live currently, a man that's 65 has a 50% chance of living to age 80. I think it's 88 to 80. And then from there, he has a 25% chance to meeting age 93.
Mm,
So if you look into that, people are living longer.
absolutely.
And if you take that with the men, and women usually outlive men by 8 years.
Right.
And so on the average, so if you look at it, I tell people in family dynamic, you think about it, one, and I'm sure in your profession you've seen one health crisis can really uh, wipe out, generational wealth, can do
Yeah.
really take away a lot from generational wealth. And I always like to say this is a great opportunity to ensure that wealth preservation is passed on to the next generation.
Hmm. Absolutely. And then there was a third one. I just wanted to make sure you got out.
Yes, you're correct. No, it was the a long-term care annuity with an annuity with a long-term care rider. So you can get
Hmm.
an annuity. It does still take some underwriting, but this is for those who do have some assets. You can take those assets and transfer them into an annuity, but also too, it has a long-term care provision involved in it where there's a multiplier involved where some companies will offer you some factors can double with the annuity was purchased at, the premium on the annuity, which can go for long-term care. There's also some things that you have to take into consideration with that because there's some cost associated with it. So this is where we delve in to find out what's uh, ideal for the clients or the people that we're working with to make sure that it is cost effective.
Hmm.
But it's a huge benefit. So you can turn that, and a lot of times, sometimes there may be a clause where you may have to wait a certain time period, but then
Right.
there's some that actually turn on immediately. And so, again, it's just finding out what's ideal for that particular person and meeting that need. So that the rider in and of itself, and all of these can be used for in-home care,
Hmm.
for the most part. So, in which it's beneficial to the client in of itself.
Right. So we always think that long-term care is mainly for in-home services, but what else can it be used for?
Well, of
Long-term
course,
care in
going
general.
into, of course, nursing home
Hmm.
facilities. So, somebody, you just don't have the, people recognize that with their parents, their loved ones, rather that it would be better that they need 24-hour, round the clock attention. Then, you have to, do what's in the best interest of the loved one.
Yes.
So, people will make sure that they're in a place where they're comfortable, they can get the care that they need. And if you look at a nursing home facility, we have some great ones in Maryland, some really nice ones in particular. But and I know of a couple in my area. But one of the things that I always like to emphasize, and when you have to do something like that, and they have the care, you can use the cost. You can use, say, the long-term care insurance to cover the cost of a long-term care facility. The difference is a long-term care facility or a nursing home. Of course, for that care, there's a cost associated with is definitely higher than the cost of in-home service, but you still have the resources to offset the out-of-pocket expense that an individual would occur.
Okay. All right. Again, if you're watching and you have a question or a comment, you can put it in the comment section and we'll discuss it. Can you tell us where we can find you?
Oh yes, yes. You can definitely find us. I'll put our website on the chat, but Plans for Life. You can find us on the website. You can definitely reach us on the phone at 301-541-3136. You can find me on LinkedIn under my name, Moses Wright the Third, as well. So you can find me in any of those capacities. In particular, if you have any questions or comments or anything that you want. I'm always willing to talk to people about this particular topic, because not only do I service clients in this area, but I do feel like knowledge is power. And particularly, and that's and knowing when people you can inform them, they can make the best decision for their loved ones. And I think particularly now it's a great opportunity because where everybody's planning for a gathering, and particularly, when you think about where we've come from in 2020, where most of the gatherings were suspended and where
Right.
people weren't able to gather with loved ones, will be the first time where people will be able to connect. It's a great time to have the conversation. Some people have already had the conversation, or continue the conversation, rather, shall I say?
Mm-hmm.
And looking at next steps. What should we do? And I think having that conversation is not only imperative, but it's healthy. In terms, so many times I've seen it where people have planned and it worked really well, and people haven't planned, and people are challenged in terms of what to do next. And one of the things that is definitely, or one of the phrases that we customly come across is, "Well, I just didn't know." And this is a great opportunity. If you don't know, we can just kind of find out, and we'll love to partner with anybody again, just to have a conversation. We'll talk to people all day about these issues, because it's tragedy, or tragic, shall I say, to see it on the other end when people are surprised. And I've shared this with you. We had that one-off conversation, Dr.
Yeah.
James, where I talked about a relative who had her parents ended up going into a nursing facility, and they had enough care to cover her father after his transition. The mom's still in long-term care in a nursing facility, and after all of the Medicaid and the out-of-pocket expenses were exhausted, then they had to um, use the assets, and the only asset that was left was their home. And I think mom used up about 130,000 of that. And when you look at it, just to kind of give you, this is not in the state of Maryland. I think this is in up north, in terms of, I think, Connecticut. But when you look at it as a whole, I mean, I think they paid 50,000 for the house, and by the time it was appraised, it was like worth almost 500,000.
Mm-hmm.
But the house had to be sold to cover an expense that was only 130,000, which, if they would have known, they could have gotten out in front of it and been able to not only preserve that asset, as well as be able to satisfy the cost that they incurred with the state. So things like that, I like to equate that to wealth preservation, because a
Mm-hmm.
lot of particularly African Americans, wealth is tied to their real estate. So we try to make sure we just kind of look at that closely, and provide options.
Absolutely. So that scenario is a common one, not just in Connecticut, but everywhere where, someone passes away or someone needs more care than they can attain in their current living environment, and you're just trying to quickly find a solution. What would you suggest before you get to that point that you do, in order to reduce having to sell a home possibly?
Well, again, I like to say, have a conversation. Have a conversation, and particularly with it doesn't matter if it's a parent to a child, or adult child to an aging parent. and particularly, I think it's important to facilitate that conversation. And particularly, I like to always put the emphasis, the onus on the children, the adult children, to the parents.
Hmm.
Because a lot of times, parents come from a different generation and they may be a little prideful not to share that information, but to not just say what's going to happen, and particularly when you're no longer around or something would have happened to you. No, but delve into a little bit further. Ask, some probing questions. How are you faring? What else would you need, or what would you want? In terms of what could we particularly if both parents are living, what if something would happen to mom? What if something would happen to dad? Where would you want to? Where would you want to feel most comfortable?
Hmm.
All these things, it helps in the planning process. And also too, now even if it's not myself, but get yourself a financial planner or advisor, and bring them into the equation. They can give you some advice. Particularly a lot of times is knowing the laws. One of the common, and I give you this example, one of the common analogies that I come across is people always think, oh, people have a tendency to think that they can get in front of a situation by maybe just changing a deed, not realizing that there's a 5-year look back in most states, in all states, including the District of Columbia, that we're transferring assets where it won't be counted against the person needing the care. So you just can't transfer a deed into a adult child's name, and it's like 18 months, and then there's a need, and the government is going to overlook it, or the state's going to overlook it. No, there's a provision involved. And so really knowing those laws, and really kind of talking with someone who does this for a living, that can really help, a professional rather, that can help guide. And a lot of times, if you find the right person, a consultation will be very minimal, but in the long run, it can save you a lot of headache, in particularly. And not only just going from that, a lot of, that also lends itself into some estate planning
Hmm.
in terms of how you would approach that, because um, that would be that actually would lead into some forms of estate planning, which people really need to be aware of, and particularly on how to handle that, and how to utilize protect your assets, and how to utilize the laws to make sure that the transference of wealth is not just I want to say seamless, because there's always legalities that you may have to go through, but as seamless as possible,
Hmm.
and make sure you're setting up the next generation to move forward as much as possible. Not necessarily, it's always going to be a challenge emotionally, but otherwise, you should be able to do so, and put yourself in a really good position.
Okay. To the person who thinks that, say they're in their 70s and they're too old to get long term care insurance, what would you say?
No, no. If you're in your 70s, it doesn't matter. I mean, you have companies that will approve. I mean, all the way up to 75. Then you have companies that will approve. You can write annuities. I personally, and I think I may have shared the story. I have a client that we talked about long-term care needs, and she was 82, and a lot of the insurance companies usually kind of go up to 80, 81. But I found a company after some digging that actually would approve her. She had no health issues at 82, was still working, still
Awesome.
vibrant. Um, Found a company, and we were able to get her approved, and with a little long-term care provision in there as well, and some cash value, and she was pleased. And so we were able to work with her. So just a little bit of speaking with someone, and making sure that you share your goals, and the right person will actually work with you to hopefully to help you achieve it. But age, until you talk to someone, I wouldn't definitely not allow anyone to count themselves out and say I'm too old. No, they can go up. I've seen some companies go up to almost 90. So
Mm, that's great. Okay, so one more question from me in terms of, let me make sure there are no comments over here. Okay, um, in terms of being able to make sure that you have all of the insurance needs that you may need in the long term, because we never know how long we'll live. what would you suggest you have in addition to having traditional life insurance?
Well, I think in terms of, again, to that point, I think it's based on individual needs, and that's why I said you can't really take a one, you can't take a one size fits all approach. You got to kind of find something particularly about that individual and their goals, in
Mm-hmm.
particular because when you think about it, I definitely believe the basic in terms of life insurance is essential. Um, but when you take into account, sometimes you need to factor in, your parents. Where were your parents? Uh, do you still have your parents with you? Did they, do you find that there is a common disease in the family that, if they're young enough? So you want to do is you want to get out in front of it, but it doesn't. So just limiting oneself to say because I've known that I'm just throwing out something diabetes or cancer run in the family. Well, you have to look at it. People are more health conscious and people are living longer. So it doesn't mean that it's going to impact that individual. You can get out in front of it. But understanding this, you may need to look at not only protecting your pension, but protecting, while somebody's definitely in the growth stages of their career, the assets that they will have and the assets that they're accumulating at that given moment. So you want to definitely have those covered as well as look at, something that can have long-term care provisions in it. If not, can easily be converted into something that will help with the long-term care expense, and just in case if it's needed. So I like to look at the life insurance because it can be used in so many different facets, and particularly if you look at estate planning, somebody lives a long life, a healthy life, and when they're transferring assets, you have a trust. One of the things I've seen that I think is extremely important is when that trust is enacted, that there's enough to pay the taxes on the trust without impacting the next generation. Well, a
Okay.
life insurance policy is great for that. You can, you have something to cover the taxes so the next generation doesn't have to bear the tax burden that's left behind. And so and the assets that you wanted to pass along can pass along, and then of course they can move on with life, and then that next generation as well beyond them would be able to reap the benefits. So there's a lot to be said in that, and I think that's a great start. I think also too, exploring, and I know some people may not look. I like life insurance that provides cash value, and particularly because I like to paint a picture with clients that if all things are exhausted, that you can use life insurance to supplement your retirement. I always like to share that opportunity with them and show them how they can do that, how they can leverage that.
Mm-hmm.
Um, and particularly if they're early in their career and their career is growing. I'll talk to them about term insurance, but I'll talk to them about the conversion piece. How as they get into the height of their career, they can convert it without having to do a medical again. And leverage that. So there's a lot that in that where I like to share with clients based on their needs and help them to factor or figure out something that will work best for them.
Okay. Sounds like it is just like PT when people ask us, well, how can you help me fix this? It all depends on what's going on specifically with you. So thank you so
Indeed,
much for
indeed,
joining us.
indeed, indeed. It does. It feels like what's going on. And I've shared sometimes before or previously that a lot of times what I'll do is I'll work with a client who's retired, maybe aging, and I'll ask them to bring their children into the conversation. Can they make an introduction?
Mm-hmm.
And I'll share kind of not necessarily like a mediator, but I'll just share from my perspective, from a professional perspective, that look, this is what is taking place, and this is how this is going to impact you, so that you can understand what is taking place and what you need to prepare for. And so, not necessarily just when somebody's looking at just the transition part, but and particularly some of the language that you need to be familiar with, some of the things that you need to take into consideration because they never had to work with a professional before, to be able to understand what I do and how it would impact them in their lives, and to show and really kind of get them to thinking about um, life changes, in terms of that, and then as assets as a community, and in terms of shared goals,
Mm-hmm.
between parents and child. So it's not where one is picking up and starting over again, shall I say,
Okay.
but really seeing the benefit of the previous generation's work and how I can continue it and make it uh, uh, preserve it actually for my children and the children that were to follow.
Mm-hmm. Is there anything you wanted to give as a final thought that connects possibly reverse mortgages with financial planning?
Yes, indeed. A great question. I mean, that was a great segue. Particularly, I know that you've had reverse mortgage specialist involved in your broadcasting and streaming, and I thought that was a great segment. I had a chance to watch it, and very knowledgeable and very informative. One of the things I would definitely say it's again talking to a professional, because I think a lot of times people have misrepresentation of what a reverse mortgages represent or what they do,
Right.
and based on that misinformation, people are making decisions, and I think that is a grave mistake. I think that if you look at the laws, they are really favorable to the homeowner, the person who's actually applying for the reverse mortgage. And I think if used correctly, it definitely will benefit the person who needs the care, as well as it can be beneficial to the generation that is to come. And I think that's where one of the pieces that I was kind of alluding to earlier, when I like to get people together, when you look at families together from different generations again, and talk about how they could use it to work to the best of their ability, and particularly the best of accomplishing the goal of not only keeping the parent in the home, but providing the care that they would need, but then also too how the child would have the opportunity to make sure that they acquire that asset and keep that asset in the family if
Mm-hmm.
you're using something like a reverse mortgage. So I think it's again, and I think people have. There's a lot of people in this country have taken great advantage of that opportunity and used it for their benefit.
Uh-huh.
And I've seen it, and it's not just limited to people who are in economically challenging situations. This is for people who are as some people would consider, uh, I wouldn't say affluent, but they would be doing pretty well.
Mm-hmm. Got it. Okay. Well, we thank you so much for joining us. And if you are interested in connecting with Mr. Wright, his information is on the bottom of the screen. But can you give your website too?
Yes, if you can just like plansforlife.com, P-A, plans, Plans for live.com. So when you look at that, I'll try to, if I could, put in the chat box. And also, too, I did send you some information on long term care.
Okay.
Uh, Dr. James in the chat box, particularly covering the services and support, and particularly when you talk about long-term care, when it comes to who pays the cost of long-term care. So there's a research paper from Congress that talks about who pays for long-term care. Most people do not know that. They think, some people have a misrepresentation that Medicaid will pay it all.
Mm-hmm.
That's not the case. They may pay some of it, but not all of it. Then you look at it, then they'll think that, well, Medicare will pay for it, but um, they have a misrepresentation of what those programs typically are. When you look at Medicare as a federal program that pays covered health services for the elderly, and particularly there, and then you start looking at in terms of Medicaid can cover some long term care, but if you look at it, there's a particular costs associated with it, but most of it will really come from either out of pocket spending or private insurance, or private funding that is necessarily required to cover the long-term care costs. So you look at it, and then also kind of explains in that the spin down method. You already familiar with it, that you can't have assets over $2,000 if you're single. Um, to when it comes to long term care, and this is what we like to do: partner with people to show them how they could uh, utilize the assets to make sure that they can cover that cost. But I have that. It's a two-pager that I'm going to send over to you. And if anybody wants that, I'm sure they can reach out to you
Sure.
as well as myself to get that easy read. But it's definitely something that can keep you informative in terms of how to move forward when it comes to that cost.
All right. Well, thank you. You shared quite a bit of information to help us as we age, and also right now to know what we need in order to be successful financially. So, thank you so much for joining us. Thank you, everyone, for watching. Everyone, have a good night.
Thank you so much.
Sure.